Welcome to the deep dive. We know many of you are looking for clarity on retirement options, so today we're diving into one specific product.
That's right. We've got some material here from Diversified Insurance Brokers about the SILAC Teton Series fixed indexed annuity.
And our goal is pretty simple, really. We want to understand its main features, how it handles principal protection, growth, and getting access to your money.
Exactly. Let's break down how it's designed and what it aims to do for savers. So where should we start?
Let's begin with the basics. What exactly is this SILAC Teton series?
Okay, so fundamentally it's what's called a modified single premium fixed indexed annuity. Big phrase, I know.
Oh, yeah. Break that down a bit.
Single premium just means you typically fund it with one lump sum payment. Fixed index means its growth potential is linked in part to an external market index, like, say, the S&P 500.
Okay, linked to the market.
Yeah,
But I thought annuities were about safety.
right, and that's the key part. It aims for long-term protection without direct market risk to your principal. Plus, any growth is tax-deferred.
Ah, tax deferred. So no taxes on the gains until you take them out later.
Precisely. That's a common feature for long-term retirement savings vehicles.
You mentioned protection from market risk. How does that actually work alongside the potential growth?
Good question. There are different ways your money can earn interest called crediting strategies. One is just a simple fixed interest rate.
Okay, straightforward.
But the indexed options are more unique. They track an index, and this is crucial, they have a 0% annual floor.
0% floor, meaning
Meaning, even if the index it's linked to has a terrible year and goes down, say, 10%, your account value based on that strategy won't lose value due to that index drop. You just wouldn't get any indexed interest credited for that year.
so you miss out on the potential gain in a down year, but you don't lose your principal due to the market drop itself.
Exactly. And any interest you do earn in positive years, it gets locked in annually. It can't be lost to future market downturns.
Got it. Locking in gains, protecting the principal from index drops. That sounds appealing. What about flexibility? What if you need some of that money before retirement?
Annuities are long-term products, so there are rules. But the Teton series has built-in liquidity features. After the first contract year, you can typically withdraw up to 5% of your account value each year.
Without surrender charges, you mean?
Right, without incurring withdrawal charges or penalties on that amount. And sometimes unused withdrawal amounts can carry over. That's the cumulative withdrawal part.
Okay, 5% annually. And required minimum distributions, RMDs.
Yes, RMDs needed for tax rules are generally accessible without withdrawal charges too.
The information also mentions some built-in benefits for health situations.
Yeah, that's important. There are specific benefits like a nursing home benefit, terminal illness benefit, and a home health care benefit.
What do they do?
Basically, if you meet the specific health criteria outlined in the contract, like needing nursing home care or having a terminal illness diagnosis, these can allow you to withdraw more, sometimes even the full amount, without surrender charges. It adds a layer of protection for unexpected health events.
Okay, those are built in. Then there were optional riders mentioned Elevation and Elevation Plus. What do they add?
Right. These are optional extras you can choose to add, and they do come with an annual charge, usually expressed as a spread on the indexed strategies.
So a small cost for extra features. What kind of features?
Well, the elevation rider, for example, bumps up that annual free withdrawal amount to 10%. It also has that cumulative carryover feature and allows a one-time extra withdrawal for certain life events, like maybe unemployment.
10% withdrawal, that's more access, and Elevation Plus.
That one adds even more. It might include an upfront premium bonus, adding a percentage to your initial premium. It also has enhanced liquidity, the life event withdrawal, and even some spousal benefits if one spouse needs qualifying care.
So more liquidity, potential bonus, wider benefits, but with a slightly higher annual spread, I assume.
Generally, yes. Elevation Plus usually has a higher annual spread than the basic Elevation rider. It's a trade-off, more features for a higher potential impact on index returns.
Makes sense. What about the end game? Passing wealth on or taking income?
For legacy, there's typically a death benefit that pays out the full account value to your named beneficiaries. And if you have a spouse, they might be able to continue the contract as their own.
Spousal continuation. Okay. And for income?
After a certain waiting period, you can usually convert the annuity into a stream of income payments. There are different options, including payments guaranteed to last for your lifetime.
So wrapping this up, how does Diversified Insurance Brokers position this Teton series overall?
They seem to present it as a comprehensive retirement tool. It's about finding that balance, protecting your savings, having a chance to grow them linked to indices but with that floor, and keeping access to funds when needed, plus those health-related safety nets.
They likely emphasize tailoring it, right? Matching the specific features and riders to someone's individual situation.
Absolutely. Annuities aren't one size fits all. Their role would be to see if this specific structure, maybe with certain riders, aligns with a client's financial goals and how comfortable they are with risk.
Okay, so we've covered the core structure, the single premium, the fixed and indexed options, that important 0% floor, the ways to access funds like the 5% free withdrawal, the built-in health benefits, and the optional riders for more flexibility.
Exactly. It gives a pretty clear overview of what the SILAC Teton series, as described in this material, is designed to offer.
So for our listeners thinking about their own retirement, considering your personal goals and how much risk you're comfortable with, how does the idea of market-linked growth potential combined with that downside protection, that 0% floor, fit into your own financial planning thoughts? Something to consider.